To ETFs in 2026, and the pace is already setting records in everything from stocks to gold and silver to new leverage bets on your favorite tech stocks. But here's the head scratcher. If ETF flows are strong, how come sometimes they trend down? And flip that over. If prices are ripping, why do flows sometimes flatline or even trend down? On today's Stocks in Translation, we're going to answer those very questions. And first, let's start with some basics. An ETF is a bundle of stocks or other assets like bonds or commodities that trades like a stock. ETFs have two numbers that people might confuse: price, what investors are paying right now, and flows, what the ETF or whether the ETF is adding shares or shrinking. Price follows the value of everything it holds all day long, at least in theory. For flows, most of the time, ETFs trade like a stock. Investors are just swapping ETF shares with each other. So there can be huge volume with no new shares created at all. Flows change only when the share count changes, which is tallied at the end of each day. Shares can increase or decrease when big trading firms, market makers, and broker-dealers swap stocks or cash for ETF shares, or do it in reverse. That's a process called creation and redemption. And the dollar value of flows are how much the shares have changed over time and what's inside per share. But you don't need to focus on the math. It's just to help explain why flows and price do not move in lockstep always. Flows tell you that the number of shares of the ETF have changed, not that every stock got a fresh bid. Now here's the head scratcher. Even if flows are positive, price can still fall. Flows are support, not a guarantee. If there's more selling in the underlying market than buying, prices can trend down, even while ETF shares are being created. And the reverse is true too. Prices can rip on a small group of aggressive buyers, even if the flows look quiet. Now let's put that on the cleanest current real-world example, small caps. And we've got a chart here from Todd Sohn at Strategas ETF Research, which shows a one-year change in small cap ETF flows in billions of dollars in white. And the green line is a one-year % price change. You can see that after the initial pandemic sell-off in 2020, both flows and price got a huge jump, and I'm circling that right here. And flows stayed pretty high even as price growth fell, and eventually turned negative in the 2022 bear market. In fact, flows stayed positive that entire time and throughout the first 2 years of the bull market in 23 and 24. That's this white line right here, and it turned up. But after price failed to take out the highs in late 2024, investors saw a double top and flows collapsed. You can see that white line eventually fell into negative territory where it still is right now. And that's despite the Russell 2000 trouncing the NASDAQ and the S&P 500 this year in performance. So don't read flows like a crystal ball. Read them like crowd behavior. Are investors showing up consistently, or are they backing away? Right now, flows are showing that the crowd is getting a little bit more interested in small caps. Now let's zoom in into some sector flows. And here we have cumulative flows since the release of ChatGPT in November of 22, which is also when this latest bull market began. And this is from Todd Sohn as well. Tech has been the main magnet, and that's the white line that's been trending up. No surprise right there, and I'm tracing this out in red. But look at healthcare versus energy, both still in negative territory at the bottom. But they are inflecting up a little. Healthcare in green has been coming back to life. Price turned up in the middle of 2025, and flows have been improving, although it's a little hard to see here. That's what it looks like when a trend starts to get sponsored by real money. Now, energy in blue is the other version. Prices started to perk up this year, but flows are just barely turning up yet. So it's still an unloved move. And if flows start kicking in, that could add fuel. And if they don't, energy can stay a grind. So here's what to watch next. For small caps, do flows keep turning up and show year-over-year growth, even if price doesn't hit new highs every day? That would be strength. For healthcare, do flows keep improving after last year's upturn? And in energy, do flows finally grow as price rallies? If not, we might see more choppiness in price.